Hello, everyone. Hi, Stanley here. How are you guys tonight? Uh, I hope you can hear me well. And try out your chat box. So if you guys are connecting through your phone, you can click on the three dot button and then you can come out with the chat box. That's how you can communicate with me. So today is our number fifth Premium Club webinar. And today we're going to talk about cybersecurity. So if you have missed our previous few webinars, you can always go back to our Premium Club website, and the depository is all there. So you can view back the old webinar that we have gone through. We have gone through a few, talking about a few Singapore stocks, and we talk about one where is a breakdown about China right now, and also one on the sportswear industry in China, which is Li Ning and also Anta. So definitely check those out. But today, this webinar is created after I have done, I think, close to a month and a half of study into this industry, just trying to understand a little bit more about the industry. And today, I've come to give a very basic, I guess, summary of what I understand. So I'll make it as simple as possible, and also just more from the point of view of an investor, how we should look at this industry, what are the important things to look at, and of course, ending with some of the key companies within this industry, and maybe how some strategy that we can invest in the cybersecurity space, right? So good evening, everybody, and glad that you can join me. I can see a few familiar faces, right? Valentine, David, Angus, Alex, Mansing, thank you so much for joining me. And feel free to chat with me along the way as I present this. And if you have any question, just drop down the chat box and we can have a discussion. I'll monitor it as I go along. Hello, Alex. Yeah, so of course, this is just a summary of what you can expect from Premium Club going forward, right? Apart from the written report that I am still doing, and this is the webinar part where we go into more details, and I like to have a discussion with you guys as well. We can also have a discussion on even your own personal portfolio. If you want me to review your portfolio, you can reach out to me, and I can definitely do that for you as well. And so what we'll be discussing today, very simply, it will first have a basic outlook on what is the cybersecurity industry right now, and who are the main players. Later on, we have my usual segment called Spin-off, some of the interesting things that I found this week. And also lastly, talk about how actually I plan to invest in this industry, offer a few options. Maybe I'll share them, and you can let me know if you have other ideas on what might be the best way to invest in this industry, and is it a good time right now to invest in this industry. Okay, so this is a very complex, complicated chart, but I found it in on one of the interesting blogs talking about the industry. And this is basically a quick summary of what the industry is about, but I don't want you to worry too much. But just bear in mind that the industry is segmented out into different areas of point where they are protecting in a way. So this is the landscape. We'll go through this one again later, but just want to share with you. But I think this is a good analogy, right? After reading so much, it actually, in the first few days when I was just reading up on it, the more I read, the more confusing I become, right? You come up with a lot of cybersecurity terms where they talk about, especially different solution that they have, like what is CWPP or CASP or SASE. It gets very confusing, but at the end of the day, I think a good way to visualize it is just view cybersecurity as actual security. So imagine that what you're trying to protect is your tower, right? You have this huge tower in the middle of KL, and you want to protect it there are a few ways on how you can go about protecting it, right? You can have securities throughout the entire building, but you can have security outside the parameters of the building. You can have CCTV at different location. You can have a centralized place where the security are monitoring what's happening in the building, and the different equipment that your securities are equipped with, right? It can be a retiree security just at the door, just checking people in, or you can have a full outfit security, like with tactical gear throughout. So the level of security level that you want to have is up to you. Similar in the cybersecurity space, that's similar as well. So how exactly they are going to do it is based on where they are placing these securities, either in the hardware space, they call it endpoint here, or on the software side, or just protecting the core network, or protecting the people. And the next thing is how aggressive this cybersecurity firm are, the level of security you want it to have. Is it just detection? Is it just detection and response? Or they have on the people side, they have a zero trust protection where every single key things that you want to do, you will need to authenticate yourself again, right? This is something that we always see when we're doing bank transaction, right? Not just on the login, but then every time we transfer some money, they'll want us to re-authenticate ourselves again. So why are there so many different cybersecurity firms out there, right? Just look at this. This is one industry that's still very fragmented compared to the the other tech sector, either your cloud providers or your social networks or your search. Those are very, very consolidated, but in the cybersecurity space, it's still relatively quite fragmented. And it comes down to many of these companies, they have different approach on how they want to view security, on where or their philosophy when it comes to detecting and responding and protecting the database that their customers want to protect. Okay, so let's go through a few of these different strategy that they might have. Okay, and it comes down to where these security companies focus on when they are protecting. Are they protecting at the hardware point? Are they protecting on the software point? Are they protecting the network and things like that? So some of the key areas, it is endpoint, right? So endpoint meaning any devices that is authorized to connect into the database of the company. So I view it as all the key main roads that is connecting into your skyscraper, right? So go back to our analogy. If you're protecting your skyscraper, all the roads that connects to your skyscraper, you place roadblocks and you have security placed all throughout. So that's one way to do it. And there are a few big companies that is doing in such a way. So this will be the hardware point where you can also even view it as just those antivirus that is installed into your computer. Those are an example of endpoint security. So one of the key players out in this space will be CrowdStrike, and that will be one company that we will look into also later on. Another one is protecting it through the software side. So meaning that hackers, sometimes they don't go through, it's not just phishing for password from the users and then attacking it from your iPad or from your PC. Sometimes they attack through directly the code inside your database and your company. So this will be if your company is a little bit tech focused and you have a tech team and they have to develop your own source code for your company. Sometimes when they're developing this code, they have to work with different suppliers and different other software and APIs, and a hacker can infiltrate that, right? And so the physical analogy I think of is if you watch movie, right, when they want to infiltrate a building, sometimes they dress up as the service crew, right? They dress up as a plumber or the electrician and go into the building. So this would be similar to software protection. How are you going to scan through this service crew and all the service door that goes into your building, and to ensure that no one is using this access point? And some of the big companies within that space that control and try to protect the company security through this checkpoint is over here, like Traceable, even Datadog. These are some of the more well-known and possible candidates that we can invest. And then we have the core of it all. So what the core of it that we are protecting is the network that links directly into the data that we are storing, right? So these would be consider the skyscraper, and we are protecting all the entrance point of our skyscraper, and even maybe the lift, all the lift that can go through, that people can go through once they are inside the network. And then within that network, we can have different layers of security. Of course, the most default one, we can have the standard one that the company, the building is providing us. Maybe a retiree service person that is just at the door, tracking through people authentication, or we can have a full team of SWAT guards that is in full tactical gear. And of course, we have a centralized area where they can monitor everything. So all this translate to the different offerings that cybersecurity firms also provide on protecting our data for companies. And I would say this is one of the biggest part and the biggest portion of company trying to protect through this strategy. And many of the bigger cybersecurity firms are network focused and many of them are built up through building firewalls in the beginning, and then now transfer to being a cloud protection provider, whereas they are key on protecting your network of your company. So like Palo Alto Networks, Fortinet, Checkpoint, Scalar, and of course Cloudflare. Those are big players within this industry and possible candidate for us to investigate and invest in as well. So this is one of the slides from Fortinet I feel that it's quite interesting to take a look at. So if you visualize that, this is the important thing that we want to protect, which is our network and our data within it, then within a working period of our company, our network is constantly being accessed by many, many different areas. It can be from the endpoint, which is all the device that we authorize, or the users. The user, sometimes the authorization comes from the user and not the device. And so, especially when now from work from home or bring your own device is quite common for companies. Say, for example, I myself have one iPad and 2 phones and 1 iMac and 1 laptop. So I can access to the data from whichever device that I want. And this means that the company cannot really control which device comes into the network, but they have to authenticate the user itself. And then we have all the maybe APIs or other software that we're using to help us run our business. Your ERP, like your SAP or your Oracle, but also even just our Microsoft 365, our Adobe, and our cloud provider, of course, our Azure and our Zoom. So all these still have to fit into talking to our network. And whenever there's traffic and where there's connection, there's vulnerability. And that's where areas that we have to think about how to protect. So it's quite a big complex issue. And just a, for a simple example, like a single example of how hackers can come in through a firewall breach. And this is also an example shown from Scalar, one of the major companies, that they can find places where they can attack within a weak point. But once they are in, there is high possibility that they can go across all your data and different departments per se to find where are some of the key value data that they should be stealing for either through ransomware or things to just expose the company on restricted information. And once they do that, then your whole network is compromised. So who are the main big player right now in this space? There's a few. I'm going to talk about just a few of them that has done pretty well over the past few years, and also they are more in a position where I feel if consolidation happened within this space, they would have a higher chance of coming out on top. So of course, number one is all the cloud provider actually. So imagine that these are the building owners, and maybe like our REIT, right? CapitaLand Integrated Trust. So these are the people like Microsoft, Google, Amazon. From their cloud providing the cloud, they have some default sense of cybersecurity and also some add-on if we want. Okay, so those come with the by signing up on their cloud platform. But also, if we want additional help, these are things that maybe we consider would be hiring an external security firm, and your CrowdStrike, your Cloudflare, Palo Alto Network, Scalar, Fortitude. I think these are some of the main big players right now that are still listed and still offers a lot of interesting prospect for us to look into. So what are the key trends that I feel that this industry is having right now? So some of the main macro trends, right? I think number one is we have to understand that in the internet space, is quite a lawless place. And a lot of times when hack happens, or even just scam happens on the internet, there's nothing much the authority can do about it. Sometimes the scammer might be far away from another country and scamming us here. Sometimes is scammer from here scamming other people from other countries. So a lot of times it's almost impossible to bring any justice once the crime happened. And so internet is really a big cowboy town where the companies, especially big companies with very, very sensitive data, end up that they have to take care of their own security. They have to hire their own army, they have to hire their own police in the cybersecurity space to ensure that their information is intact and is protected. And more importantly, as we go in the future, right, we are talking about much more acceleration of digital transformation for company. Even small SME has to go through this process right now. And more important data will be stored digitally. Almost all our financial data is now stored digitally. Many of our work are stored digitally, and many companies are going paperless as well. So this is a trend that is not gonna stop, which means more and more important data that is worth protecting will be on the internet, and companies need to protect them even more importantly, even more stringently. But then comes the key magic word, right? AI. People like to talk about once you say AI, your stock price jump 20%. But in this case, there might be some real tangible potential and also key risks, because AI can be used for both good and evil. And on the evil side, scammers and hackers can very easily use them to manipulate and scam and learn from different strategy on how to hack into a company system. Right. So, for example, maybe just using the AI video features where they can do deepfakes on people. They can maybe deepfake into the CEO of the company, send a message out to all the employee, asking them to, do something where they have to log into their system, and from there, then they can track on to find the authentication to go into the network, right? Just a random example from my head, but it's totally doable right now, and which means that more and more, even more sophisticated hacks and scam would arise from all this technology. And typically, when a new technology come up, the first wave of people that adapt this technology tends to be criminals, and also your first early adopter, right? But sometimes, most of the time, the criminals will also be one of the first to come and experiment with this new technology, and which means that the demand for this cybersecurity is always on the rise, and it's not coming down anytime soon. So if we look at the industry as a whole, some of the key things that jump out to me from a SWOT analysis point of view is that many of these companies, their key strength is they actually have quite a good economic moat in their business, meaning that because they have quite a good sticky base of customers, and many of the companies, their retention rate is 95% up to 99% of retention rate from their customers, and many of them has demonstrated that is not just the retention rate, they have very good track record on upselling their solutions to the customers as well. So not only the customer is renewing with them and staying with them for a long time, many of the customers actually paying more and more and buying more features from them over time. So that's a strong point for that company, for this industry. So if nothing bad happens, the customer tend to stay with them. Some of the weaker points is that maybe the entry point to finding new clients would have to go through consultants, your Accenture, your PwC. Those are the guys that come into your company and tell you, hey, you need a digital transformation. Let me help you. And I'm going to recommend CrowdStrike because they have a much higher commission for me. They don't say that, but typically you have to have a good relationship with all these consultants as well. And also right now, I would say that at least in the tech space, cybersecurity space is still considered quite a fragmented market, not really a very consolidated market. So there might still be a very fierce competition among everyone. And from the threat side, I'm not very okay, for this one, I'm not. I would say that I can see this happening, but many of the people that I speak to told me that most of the cybersecurity companies do have some technological edge that the big cloud provider cannot just really push them out, right? So in my mind, I can imagine that since if all our data is already on the cloud, it means that by default, if I have all my data on AWS, then the most logical people that I seek out for cybersecurity would be AWS anyway. And if they build up their capability over time, then there's a real incentive for AWS to not support other cybersecurity firms or software on their platform, or make it difficult for them. And but we this is not happening right now, but it's just a scenario that could become a threat. And especially, I think sooner or later this space would have to go through consolidation, which it is already happening. And you never know that this big cloud provider might end up just buying a few of the big guys and combining and becoming their standard suite or default setting for all the customers as well. And then that means that end up the big winners will still be the cloud provider in this scenario, right? And then lastly, some of the opportunity which we talked about just now as well, the growing importance of data and the fear within customers, right? Right now, if something happened to the database of a big companies, it's not just the loss of the database, the shame that come with it by viral news being shared everywhere that your company has failed in the security side. That could be a big deterrent and big fear within customers, that they want to ensure they have some form of security across all their networks and database. So if you remember all the parts that all the webinar that we do, we will also go through what we call this moat rating, which is just looking at the company and to see if they have good, strong pricing power. I would do this rating as a whole for all the big cybersecurity firm that I mentioned just now, right? These few guys. And because I feel that their business model is quite similar, although their strategy might be different, but typically the solution that they're selling to their customers at the end of the day is just a peace of mind to make sure that my data is in a safe place. So moat rating can come from either economic of scale, when they are so big and their cost is much lower than other people. Branding, network effect, meaning that if one customer is on their network, it actually benefit if everyone is in the same network. Not so much for cybersecurity firm. So all the first three, I would say not to a big scale. Intellectual property, if they have some kind of proprietary technology, possible for this one. High startup costs. This is also one that it's not that easy to start up a new cybersecurity firm right now, right? The amount of software that you need to write up and to ensure that your protection software is robust, not so easy anymore. Control of resource, not that applicable for this one. But the last one is, I would feel, is one of the biggest factor for this industry, which is switching costs. Which once a customer is acquired and enters into their security platform, I would see that the customer will become very, very sticky, and it's very hard for them to actually migrate and switch to a new provider just overnight. And especially as long as the company is doing a good job and no major breach that offers losses to the customers, then it might not be a big problem at all. They might just stick with it, even if they increase the price year on year slightly a little bit higher to the customer. They might just see it as, this is just the insurance cost that I need to have anyway. And so my own opinion is that this industry as a whole do have pretty strong moat rating of maybe around 3.5, right? They do have good control over margin on their customers. Maybe not so much on the supplier side. When I say suppliers, this will be the people, the talent are working for them, um, their employees. So I would say that 3.5 is roughly what I deem them as. Some of the key risks I think we can think about and consider, which I alerted to just now as well. The risk of consolidation. Once it consolidate, it's hard to know who will be the winner, who will not be the winner. If all of them get acquired by the big cloud guys, then I guess everyone is a winner. But if the big cloud guys or they themselves start consolidating, and maybe the rest that is left hanging might be competed away. And of course, having big security risks, if anything happens within their watch, that could have a big reputational risk, and or even just regulation, right? You never know where or how regulation might change. And the last part maybe is a slightly, I would say, a slightly low probability event, but a little bit further down the road, maybe in the next decade or two, which is quantum computing, because I was reading up on it. Basically, the the way quantum computer works is totally different from our normal classical computer, which is using basically brute force computing, just having more and more power to calculate faster and faster and in bigger bits size. But whereas quantum computing calculate slightly differently with qubits, right? And it has, I guess you can just think of, they have a very, very different algorithm. So for example, one example is our current financial encryption. Our encryption is designed in such a way that it's very, very hard for our current computing model of using brute force computing to unlock and break through this encryption. But when you go into using quantum computer, then because they're using a totally different strategy of computing, there is a possibility that quantum computer can and possible to break through all this inscription and encryption. So then begs the question that does that mean that once quantum computing starts, then all our financial encryption is at risk? And that could lead to a huge problem. When the day comes, it means that all these cybersecurity firms not only have to have security based on brute force computing, they have to have security based on quantum computing as well. And that's another key skill sets that might need to be rebuilt or built up from scratch. And that means that there could be newcomers coming in later on once these become more mainstream. Of course, at this stage, it's still very, 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 very early. And quantum computing is not going to be something that we see in our household anytime soon. Okay, so these are some of the key summaries of the industry that I found about. I'm not going to talk too much onto the product range, right? So for example, for endpoint, they have solution. Let's go back. Let's, for example, on endpoint protection, like your CrowdStrike. They have a list. If you go to their website, they have a list of product range ending coming from things like EPP, your endpoint protection platform, or EDR. They have all these acronym, EDR, XDR, your extended detection and response. But to me, it's not so important. It's not so important. These are just different product range and solution range, because at the end of the day, the core purpose of a customer coming to them is still, I just want to protect my data. Whether I place a security guard here, or I place two security guard here, or I build a big immigration here, that's beside the point. But at the end of the day, all I want to is to have protection against my data. Okay, and so this whole industry, especially the big guys right now, they're still growing double digit. Some are growing 20-30% a year. Their revenue range around 1 to 2 billion to maybe like Fortinet would have a revenue of like 6 billion a year. So in the grand scheme of things, if you compare it to Google, of course they're still very, very small, but the entire market roughly is around close to 200 billion in market size, but the whole market is growing and I think it's expected to become a $1 trillion market, maybe somewhere in a decade or two, right? And in 2030 something, that's at least the projection. And so far, I feel the projection is actually quite reasonable, given where the industry is growing. So that's all the positive side. The negative side for this industry is that this prospect of this industry is not something new. So most people know it. Most investors know the importance of cybersecurity, which means that most of these companies have very, very high valuation. So if you look at a few of them, maybe we can go to some of them later. Let me see. I'll try share a different one. Desktop. Give me a minute while I change the share screen. I lost you guys. Okay. Okay. So this is a presentation by Palo Alto. You can see that their revenue is around 2 billion, still growing around 19% year on year. Their operating income is growing like 50% a year. And some of the stats, most of their stats are doing very, very well. They will show that their customers are all the Fortune 100 companies, or the major banks will be their customers. So all the prospect is very, very good. But if you look at, say, valuation, but if we look at valuation, then you'll be able to see company like CrowdStrike is trading at 800 times PE or 25 times sales. Not cheap by any means. Even Palo Alto Networks, you can see that way, way cheaper than CrowdStrike at 43 times PE and 13 times sales. So these are the kind of valuation you can expect from these companies. But of course, their prospects are all doing very, very well. Let's go back to the slides. So before you jump into this, I would say this industry, or want to invest in this industry, I would say that we can think about from the basic first, your exact need of your portfolio, if you need to invest in this sector at all, or any of this company at all. So I would classify these companies as consider much high growth company. But the risk of this company actually is not that high. The main risk of this company would be high valuation. So the only risk is that we buy it, say Palo Alto Network at 50 times PE, but it's still growing. But maybe in 5 years' time it grew, but its valuation by the market might no longer be that high anymore. In the next 5 years, maybe it's only trading at 20 times. So your stock return might end up offsetting, and you might see a stock that is to you didn't generate any return for you at all. That's possible, but to lose say 100% of your money if you invest in clouds right now or Palo Alto Network right now, I would say the probability is very, 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 very low, because this company are very well established and the market is growing extremely fast for them. So understanding that, then you look into the objective of your portfolio. So do you need this kind of company within your portfolio? Are you a dividend investor that you really want to just ensure it's business as usual? You buy companies at a good valuation and it's giving you good cash flow over time. Because this company, because they are growing so fast, most likely there's not going to be any dividend anytime soon. But if you are someone that still very young and can take more risks and feel that, I don't mind to see it through for the next decade, then maybe valuation to you now, if you have a time frame like 10 years, is not that important for you. But the growth for this industry in the next 10 years still look very bright. So then this might be stocks that are more suitable for your portfolio if you can withstand the volatility in the near term. Okay, I think that's roughly about what we want to discuss for this industry and some of the companies. Later we can look into some of the financials directly on Morningstar. But before that, just want to again highlight we have this book giveaway from last time, but sadly there's not many people that tag me by sharing some feedback. So I hope that you do something for me, which is if you can share some of your takeaway on all these webinars that I have been doing on your social media, and tag me either through Stanley Lim PS or Learn with Stanley, and just share with your friends if you find all these webinars for the Premium Club members useful. And I hope that you can give me some testimonial on that, and from there I'll select one lucky winner for the book giveaway, which is this Elon Musk new book by Walter Isaacson, and I'll reach out to you and ship it out to you if you can help me on that, right? But the spin-off section for this week is actually a Netflix show on Netflix now, is How to Get Rich with host Ramit Sethi. I hope I pronounced his name correctly. But it's quite fascinating. When you see the title, How to Get Rich, it might sound like a scammy show, but it's actually quite legit. And I enjoy him discussing about this idea of our rich life, the dream that you have of a rich life. Because all of us, being Buffett worshippers, we tend to have this idea that we must invest, we must save, we must be frugal, save every penny, because every penny compounded 10 years later is like, a big sum. I shouldn't eat one $10 ice cream today because that money compounded 10 years later is going to be a $500 and things like that. But rather, I prefer the way that he lays out, which is everybody's version of what it meant to be rich is different, right? There are some things that might mean a lot to you, but doesn't mean that much to me. Say for example, just driving a very, very fancy car, not that appealing to me because on the road I can't drive that fast anyway, right? But maybe and going on holidays is not really a big importance for me, but for some people it might be, and that might be how they feel that they are rich. And what he's saying is basically, understand what is important to you and what's important to you in creating your rich life, and then be willing to spend on all these things that you feel deserve for you to feel rich, but be ruthless on all the other things that don't really matter, and cut costs on them. And I think this is a pretty interesting concept, and so I wanted to share this new show with all of you guys. Okay, then I'll take a breather here. If you have any questions on what we talk about, drop down your chat box. Drop down your chat box, and then let's discuss. I like to, if you have more insight on this industry, because I have to be honest, this is an industry that I'm still learning, not very super familiar with it yet. And so if it's something that you have something to share as well, or you have some questions, open up your chat box, and I hope we can have a discussion. And apart from that, I just want to share with you a few things, which is the ETF that you can also look at, apart from just buying the individual stocks that we talked about just now. One strategy that I'm thinking personally is, rather than choosing who might be the winner in this case, I might be thinking of more towards this direction, which is just buying some of the ETF. I might buy a little bit right now because of the high valuation, but as opportunity comes, maybe we can add on to it, mainly because I'm optimistic about this entire sector rather than optimistic about one or two companies within that sector. So I feel that just buying a basket can also be a interesting strategy. And there are, I would say, four main big cybersecurity ETF right now, which is these few guys, which is First Trust Cybersecurity ETF, Amplified Cybersecurity ETF, iShare Cybersecurity and Tech ETF, and Global X Cybersecurity ETF. I put 2 green flags and 2 red flags here. Mainly, I wanted to highlight that I feel that for starter, it's better for us to look at either First Trust or iShare. They are much bigger company, and I would say that the ETF so far has been quite stable. Now you can see that First Trust is the biggest one, much bigger. But actually, the lowest expense ratio one is iShare. So First Trust and actually all the others have an expense ratio of roughly 0.6%, meaning that 1 year you're paying them 0.6% for the ETF. But iShare has an expense ratio of around 0.47, so slightly lower. And I guess they are trying to price out to build up the ETF. Being iShares, they don't mind, they can have a price war with these guys. They can still survive. iShare being the largest ETF provider in the world, right? But I would say stay away from these two, which is the symbol is HACK and BUCK, Amplify and Global X. They have a few issues. HACK has, I think I will share a little bit on HACK actually. HACK previously was managed by this company called ETF Managers. And they actually fall into a scandal where ETF Managers was caught by SEC by disadvantaging the ETF investor, where I think they earn some of the commission fee from the brokers directly to them, to the founders and things like that. So they're skimming off a lot of some of the additional fees from brokerage for themselves, rather for the benefit of the investor. So end up ETF managers was caught in the scandal, and ETF manager actually, I think they didn't survive. They sell off the firm, and they sell off everything to Amplify. So this is a new firm taking over. So we don't know the new management, but just from the past history, I think you don't want to go through so much hassle by just buying an ETF. So stick with the big guys. This has Bug and Global X have some issue as well, which is Global X right now has I guess a management crisis where a lot of the top guys are actually leaving. So I don't know why I didn't read much into it, but just as a manager itself, many of the top guys are leaving the company, so I wouldn't take it as a good sign as well. So these are the two that I will stick with. And let me see if you guys have any question up to this point. Wow, no questions. So good. Okay. Before we go, I do have a few more slides to go through with you. And one is I just want to let you guys know that I have joined iFAST Global Markets, and I'll still be doing the Premium Club as per usual. But I have also recently joined iFAST Global Market to be one of their wealth advisors. And I would love to speak to any of you if you have interest to understand a little bit more. And I myself want to focus more on wealth planning for you guys, which is instead of the usual business for wealth advisor, I guess throughout ages, is selling unit trust. So, but that's not really what I want to focus on. But rather, I hope that I can have a more tailored service for you guys, because from my background of working before in family office, serving the high net worth, I understand that they tend to have a more boutique style and unique solution for them. So meaning that they have to go through their current status, financial status right now, understand a little bit more on your objective of where actually you want to be, and we can work out where you should be investing in to meet that target of yours, instead of just blindly selling you products, which I think I will not be focusing much on unit trust at all, but rather I believe just using ETF to build up a portfolio is actually a much cheaper and more effective way for us to invest in, right? Unless there are some special case where we need different types of solution. But if you just want to have a chat, no obligation, you can reach out to me on my WhatsApp. That's my number right there, 94228103. And we can have a chat, we can have a Zoom call to understand a little bit more. We'll see if it leads to anything. Okay, hello Valentine. The investment return of 1 to 5% is per year. Where do you see this number? Where is the 1 to 5%? Then I can. You mean this one? This is the year-to-date return. So only for 2024 until yesterday, which is March 19. This is just year-to-date return. Last year was pretty good, but some of them has been coming down, and the cybersecurity, some of their earnings, although they're still growing, but some of the comments from the management is that is softening. So the growth rate is actually slowing down, and they can see it. And also consolidation is happening within some of the players as well. I can share with you one slide that I saw where it's talking about consolidation. Where do I see it? I think it's from Fortinet. If I can see, no, I'm just trying to find the slide first for you guys before I share the screen. Okay. I found it. Going back to Zoom, where are you guys? Okay. So this is the one I was talking about. A report from Fortinet as well, saying that it's a relatively fragmented market. You can see the top guys, Palo Alto Network has a revenue of 7 billion. Fortinet has 5 plus, about 6. I guess Splunk, Gen Digital. I think one of them, I think Splunk was just acquired by Cisco or Oracle, I can't remember. So one of them has just been acquired. Gen Digital is actually all our Norton and Avast, is all the antivirus group. And you have CrowdStrike, Checkpoint, Okta. And so these are some of the big guys over here. I would say stick to, if you want to research on the individual ones, I would say stick to these guys. And I'm quite interested in CrowdStrike, Palo Alto Network, doing pretty well. And even Cloudflare or Scala. Yep. Thank you for the information, Splunk. That was acquired by Cisco, right? Not Oracle. I remember wrongly. Yep, from Cisco. Yeah. So that's that. Okay. Let me go back to the slides. Yep. So that's roughly it. If you want to have a chat with me, again, you can WhatsApp me, and I'd love to speak to you guys on that. iFast is actually, they have a platform where it's across all asset class. So individual bonds, funds, stocks, ETF, even insurance and will writing and everything can be done within their platform. So we try to be a one-stop solution provider. Okay, but of course I will still be doing my premium club. Much of it will be focused on bringing you things like this, industrial research or stock research. I'll still be doing my stock of the month, and of course my own personal portfolio as well. But just on my own personal portfolio, you can see that this is already quite a mature portfolio where I don't have a lot of changes. But I might switch it by starting a completely new portfolio for you guys, a much smaller one, of course. But I'm still having this account to set up. But once it's set up, I would be focusing more on how I build up this new portfolio together with you guys along the way, so you can see exactly, with a sum of money, how am I planning to build it up over time. Okay, and again, of course, if you have enjoyed Premium Club, I hope you can share it with your friends. I hope to reach out to more people to make sure that I can bring more value to everyone. Okay, and of course, before we go, I always trying to end with some thought of the day, I guess, for you guys. And this is one funny quote that I saw from Billie Eilish, the singer, one of the singers that I admire a lot. Maybe I'm a bit too old for her song, but still enjoy it quite a bit. And her quote is, she said that if I make music and people hate it, whatever, I'll die someday, and one day they will too. I think she has this kind of attitude where I think it's very good, which is everybody will die one day anyway. So don't worry too much about what other people think of you, what the judgment of society, and just do what you love. And so I like to end that with Billie Eilish. Thank you so much, everyone. I hope you enjoy this part. And for members, of course, all these I would still keep it on archive for you on our member site. So even if you miss it or you want to review it as a revision, just head out to our premium site, valuemessager.com/club, and you can see everything, all the past presentation as well. Thank you so much, everyone, and I hope you have a good night. Till we meet again, investively.